Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Indian equity benchmarks are trading at the day's high. Yes Bank and ONGC lead the gains. Indiabulls Housing Finance is trading with cuts of close to 6% despite the management denying charges of embezzlement to the tune of 98,000 crore. DHFL sells its stake in Aadhar Housing Finance to an entity promoted by Blackstone. Sterlite Technologies promoters free up 21 crore pledged shares or 52% of the company's shareholding. And the Ministry of Corporate Affairs wants a 5-year ban on IL&FS former and present auditors Deloitte Haskins and KPMG for colluding with the previous management. We'll get to all of that in a moment. Quick check on how the markets are faring today. Yatin is here with some of those stock movers.
Good afternoon, Harsha. And if you look at the Nifty at this point in time, 50 points up. We have been choppy in trade for the first half. The opening was weak, but now the markets have started showing some strength. Even if you look at the advanced decline ratio, 35 stocks in the Nifty are gaining at this point in time versus almost 15 to 16 stocks on the declining side. Of course, at this point in time, we have heavyweights like ONGC as well as, Vedanta, which are pushing the index higher, 2.5% up for both of them. Apart from that, Z as well as Yes Bank are doing well, almost 3% up for that one. On the flip side, we have Indiabulls Housing Finance, which is suffering in trade, almost 6% down for that one. And a handful of these pharma stocks, Sun Pharma and Dr. Reddy's are down in trade, 3.5% down for Sun Pharma. Dr. Reddy's also losing almost 0.9% as we speak at this point in time. Of course, we also had a clarification coming in from Anil Ambani regarding, the group debt position. Those stocks are quite active on the volume front, but most of them post the clarification have seen some correction. Reliance Capital, Reliance Infra, Reliance Power, all of those stocks down anywhere between 1% to 3%.
Listen, thank you for that. Indiabulls Housing Finance, meanwhile, has refuted allegations that its chairman siphoned off 98,000 crore. It claims the bizarre complaint was made by, and I quote, a racket of blackmailers. Advait Rao Palupu now joins us with the key highlights of what Indiabulls had to say.
So, as you said, the company has termed this petition filed in the Supreme Court yesterday as bizarre, essentially saying that their loan book size is 90,000 crores, whereas the allegation is saying that the promoters and the directors of the company have siphoned off around 98,000 crores through dummy and shell corporations, which is in violation of RBI rules, SEBI rules, and of course income tax code. Essentially, the company says that a group of people, blackmailers, have been trying to extort the company for the past 2 months. They initially wrote to the company and filed a complaint to various government departments on the 6th of May, saying that the company has siphoned 55,000 crores and they would continue to make these threats if the company did not pay them around 10 crores. Thereafter, the Indiabulls filed an FIR with the police on June 4th. The police have now got judicial custody of the original complainant, and thereafter another complaint was made by the petitioner, the company says, who is also a shareholder, but he allegedly only bought these shares, about 4 shares in IBHFL last month on May 9th. The company is right now undergoing a merger process with Lakshmi Vilas Bank, where the regulator is conducting scrutiny on the books and doing a lot of due diligence to approve of the merger. And so the company says that essentially these racketers are trying to extort the company and derail the process, not only the police proceedings, but also damage the company at the time when it's going through a merger process.
Interesting there, Advait. Thank you so much for joining us with those details. Divan Housing Finance has sold its stake in Aadhar Housing Finance to an entity promoted by Blackstone. Remember, DHFL has been struggling to repay its dues to its lenders and will use the proceeds from this sale to meet some of those commitments. Shefali is standing by with some details on this one. Shefali.
Well, in an announcement yesterday, DHFL announced that it has sold about 9.15% stake. That is, the entire promoter group sold about 9.15% stake it held in Aadhar Housing Finance to Blackstone arm. Now, this money comes in as a big breather for the company, as it has been struggling to repay the payments. Remember, it has a mammoth debt of about 1 lakh crore rupees on its balance sheet. And in last couple of days, we've seen downgrades after downgrades coming in from various rating agencies agencies as far as various instruments of DHFL are concerned. In fact, CARE Ratings downgraded the entire debt instruments or the entire borrowings of the company to a default rating after it failed to pay dues of about just nearly about 1,000 odd crore rupees. After that, it did make some payments in tranches in last 3 to 4 days, and with this 2,200 odd crore rupees coming in will help the company in making the immediate payments in next 1 or 2 months or so. So in next 2 months they have some 2,000 crore rupees of obligations, and in 2019 they have some total 7,800 crore rupees of obligations to make. So if you look at the shareholding of Aadhar, Vadhavan Globe Capital held about 70%, IFC about 17%, DHFL 9%, and others about 4%. So if you do the calculations, Vadhavan Globe Capital gets about 1960 crore rupees and DHFL gets about 252 crore rupees. So this money will certainly come in as a huge breather for the company and some of the lenders as well who did lend to the company.
Shefali, thank you for that. The promoter of Sterlite Tech has revoked all pledged shares in the company with immediate effect. Twin Stars Overseas, owned by Anil Agarwal's Vulcan Investments, Cyprus released the entire pledge that was made to fund the Vedanta Resources delisting from the London Stock Exchange. Somit is standing by with more on this one. Does this remove the overhang on the stock?
Well, it does actually remove the big overhang that was there on the stock, and you can see that in the share price movement that we are seeing today in Sterlite Technologies. Now, the promoter was expected to remove this pledge in July 2019, but then they have removed this pledge earlier than what the market was anticipating, and that's a positive move that has come in. Now, as you can see in the share price chart of Sterlite Tech, because of this pledge shares that were done earlier by the promoter, the stock price of Sterlite Tech had declined significantly as various brokerages had lowered their valuation multiple on the stock. Now, brokerages like ICICI Direct, MK, Maybank, Yes Securities and others had lowered the valuation multiple on Sterlite Tech because of this pledge share issue. But then as this pledge shares have now been completely revoked, it has acted as a re-rating catalyst for Sterlite Tech. Now, management, when we spoke to the management of Sterlite Tech, they also said that the release of pledge is the best thing that has happened so far, and this move by promoter will reinforce investor confidence in Sterlite Technologies. Now, they also said that the promoters have no intention to pledge these shares going forward because of the sensitivity of these issues and the impact that it has on the investors. So there won't be any more pledge shares coming in from the Vedanta Group when it comes to Sterlite Tech. Now, other than this pledge share issue, there were some other concerns related to Sterlite Tech, which has also led to this fall in the share price of Sterlite Tech that were related to the lower fiber prices, declining margins due to the change in business mix, and because of mutual funds and LICs trimming their stake. Now, however, despite these issues, analysts continue to remain bullish on the stock. As you can see, nearly 8 analysts have a buy rating and only 1 of the analysts has a sell rating. Also, the consensus 12-month target price on the stock is close to 280 rupees, which suggests a return potential of nearly 50% on Sterlite Tech.
Soumya, thank you for that. Essel Group lenders continue to sell stake pledge in Zee Entertainment through April and May. Remember, the Subhash Chandra-led group entered into a standstill agreement with mutual funds that have an exposure to it, but not all of them. Sajid is here to tell us where this stands. Sajid.
That's right, Harsha. If you look at the Essel Group agreement with the lenders, which is mutual funds, there's a standstill agreement, but there are still lenders and mutual funds which are not part of that agreement. Banks like BOB or, for that matter, Reliance Mutual Fund, which don't have. What we've seen is in the month of April and May, there has been a selling of stock worth at least 600 crores based on the average price of the stock in those months. That comes to nearly 1.5% stake, which has been sold of stake, and this stake was held by one of the promoter company called Securita, and this stake was sold by 3 debenture trustees, which include Catalyst, Axis and IDBI trustees. Over a period of last 6-7 months, especially after September, there has been a sale of nearly 4% odd of Zee stake. Remember, the Zee management has already come on record and spoken about the fact that by end of June or early July, they will enter into a binding agreement with a potential strategic partner or a financial investor. And so this stake sale, which is continuing, which is happening, it comes into play because it brings down the promoter holding in the company. Also, the fact is that now the mutual funds and which are the lenders and the borrowers have now agreed to appoint PJ Nayak as a mediator. The role of Mr. Nayak would be primarily to be a bridge between both of them, because you have roughly around 12 to 13 mutual funds on one side and the promoters, and daily communication is creating an issue with respect and has its own challenges. And many of the CEOs and CIOs who were personally handling it, and they're finding it tough to do it, manage this thing because they had their own operations to manage on a daily basis, and the complications which comes in from stock price movement or any other news that comes in on the Essel Group from time to time. It creates an issue. So they appointed PJ Naik so as they can do a better coordination of communication, and there's unilateral communication which goes to all the parties, which includes lenders.
So thank you for that. The Hinduja Group and Etihad have developed cold feet after showing interest in acquiring Jet Airways. A senior official at State Bank of India confirmed that the deal has now been put on hold. Vishwanath is here to tell us what's caused this one.
What's caused this one? Plenty of things actually. So essentially the bidders are saying that now that there is a real prospect of an insolvency proceeding against Jet Airways, they would much rather wait for the outcome of that insolvency proceeding. First see if the NCLT actually admits the case or not. So if they do admit it, then there's a potential that there will be a bidding process, and there they would have a better price. Now remember that both Hinduja and as well as Etihad together have been putting up very strong conditions to the lenders led by SBI to buy Jet Airways. Both Hinduja Group essentially said that the lenders will have to take about a 80% haircut on their exposure, which was a problem for the lenders. They also said that they only want a minority stake in the airline, which again was an issue with the lenders, because why sell a minority stake for an 80% haircut? There is no logic that the lenders see in that. Apart from this, Etihad has already said that they're going to maintain that 24%, and that is about it. That's the level of equity that they will pump into the company, nothing more than that. So now both these bidders are saying that we're going to sit it out, wait till Thursday, which is when the NCLT is going to hear the insolvency proceedings filed by two operational creditors against Jet Airways, and then they will see if it gets admitted. Then of course there's an entire court-approved process, and bidding there would be much easier than going through a bilateral sort of deal between the lenders and the bidders.
Okay, there's one more story that you're tracking, and this is on JP Infratech. The JP Infratech's lenders have also rejected the offer made by NBCC. What's going on here? So
essentially there was a voting process that continued for about 10 days that ended Monday evening, where essentially the financial creditors have voted against the NBCC proposal to take over JP Infratech. Now remember, this case has been going on for a very long time. June 2017, the RBI shortlists JP Infratech as part of the 12 large insolvency cases. Things kept getting delayed, and after that the Supreme Court intervened. They said that we are going to restart the whole insolvency proceeding. That period again ended in May this year. Since then, the lenders have been debating on whether NBCC is the right buyer for the company or not. There have been some negotiations between the lenders and the NBCC, as was ordered to them by the court. Essentially, the problem was that NBCC has said that the lenders should be getting all the state government as well as income tax department approvals before they can take over the company and run it, which the lender said that is not their job. You are going to be the owner of the company, and therefore this responsibility falls upon you. So this debate has now led to IDBI Bank majorly, because they are the largest lender to the group, them not voting in favor of the plan. There was an NCLAT hearing on Monday as well, where the NCLAT said that it doesn't matter if you vote against the plan, you will have to submit the voting pattern to us on the 2nd of July. After that, we will decide whether the plan needs to be rejected or not. So while the lenders have shown that they're not interested in it, the final rejection will actually come from the NCLAT. So I mean, whatever decision that the NCLAT takes at that point in time. But remember, the courts can't really push bankers or financial creditors into taking a decision that they do not agree with. That is not part of the IBC. So the tribunals are only to ratify decisions. So we will have to see what happens on the 2nd of July, finally, when the NCLAT actually looks at all of these papers. But you know, all in all, the issue is now that the NBCC bid has not received the majority approval of the financial creditors, and therefore the question is whether JP Infratech can be saved at all or not.
Okay, Krishna, thank you so much for that. Auto sales, car sales fell at its steepest pace in nearly 20 years. Last month, the industry body SIAM's data show a 26% drop in passenger car sales. The entire passenger vehicle segment also fell by 20% in May. Nishant spoke to Vishnu Mathur, the Director General of SIAM, and started off by asking him what could have caused such a sharp drop in vehicle sales.
See, we have been seeing a decline happening in almost all segments of the industry over 6 months now, not just 2 months. And now in the month of May, the data that has come, we are seeing a minus 26% decline in passenger cars, which is the steepest decline since 2001, September. Right. So it's a very large decline that we are seeing. And as we've been talking about the last few months, the kind of slowdown we witnessed last year, since the time of August when the Kerala floods happened, we haven't really seen a revival in the industry. In fact, the industry has continued to go down. Inventory buildup was there, which we are now trying to correct. And this is all a process of the inventory correction, where the industry is reducing production, cutting down on production so that the wholesales to the dealers are less, the inventory pile-up is less, and we are able to manage the entire market and the system. Along with what happened last year, we had a lot of other issues. We had fuel price increase going up to the highest ever that we saw in the country. We had Supreme Court and High Court decisions which led to insurance costs going up for the industry. We had the entire finance, NBFC finance issues, which is still not corrected. And then, of course, we came into the elections and there was uncertainty and the sentiment was down, which is still today down. Mm-hmm. But we hope that as we go along, because now the strong government has come back into the center, they would be in a position to address the NBFC issue, which is a very big issue. The sentiment should come back, and expecting a good to a normal monsoon. Mm-hmm. I think the expectation is that in the second half of the year, we should certainly see some movement as we go along. If you look at the retail sale data which is being published under Vahan, we will also see that the negative numbers which are there in wholesale production, the retail sale numbers are less negative. So there is an inventory correction that is happening very actively. Mm-hmm. And in the second half of the year, because of BS6 coming in next year, we would expect to see some kind of a pre-buy. So hopefully there will be movement now. And now that the strong government has come back, I'm sure they'll be able to take a lot of decisions which they were not able to take over the last couple of months.
And then how can government help and how can they aid to at least slow down this slowdown? Well,
as far as the industry is concerned, we believe that this kind of a situation has happened twice over the last 15, 20 years, and both the times the government had come forward to help the industry and to give some kind of a stimulus. We have asked the industry for three things, the government for three things. The first is to reduce the GST rates, because new safety norms as well as new emission norms, as well as the current situation where vehicles are not selling, if the GST rates are reduced from a level of 28% to, let's say, 18% or so, it could definitely help making the vehicles more affordable and will help getting the customers back into the showroom and could stimulate sales. The second thing we have asked for is for government to set up a voluntary scrappage policy for vehicles, for old vehicles, which will remove old vehicles from the road, which are highly polluting, less safe, and will also create a market for new vehicles. The third thing we have asked for is continuation of the 200% weighted deduction on research and development expenditure. It was announced by the government earlier that these kind of exemptions and concessions will go away and the corporate tax rate will be cut. But that has not happened while this has started reducing. So either the corporate tax rate should go down or this R&D weighted deduction should be continued for some more time, because this is the time when industry is doing a lot of R&D for emission norms, for safety, as well as for the new technologies like electrics and hybrids. So this is not the right time to do away with these kind of incentives. So hopefully there will be some action taken by government, and we will be able to put together as government industry partnership to revive the fates of this industry, which is a very major driver of growth for manufacturing as well as services and employment in the country.
And overall, what kind of production cuts are you seeing? And is layoffs also starting to be a worry? Because we have done our research as well. We have started to see all these auto components companies starting to lay off, reducing shift timings. They're trying to figure out a way to not lay off a lot of people but sustain at the same time. So two parts there. What kind of production slowdown you're seeing, and how big job losses is around the corner then?
Well, you have already been told, about what kind of production cuts are happening. Individual companies are announcing to the media their scheduled as well as unscheduled production cuts and factory shut-off days. Wherever there is, we haven't come across any news of permanent workforce being retrenched or being laid off. But yes, whoever is a contractual worker may be earning a daily wage kind of a situation. If the factory shuts down for a week, then they don't get paid for it. Apart from that, I think the main impact is going to come in the supplier community, the tier 1s, tier 2s and tier 3s, which are, many of them are SMEs, and they don't have big pockets, deep pockets to continue for so long. So I think that is where the real pain will happen.
Okay, that's the voice of CM. Reliance Jio overtook Airtel to become the country's second largest telecom operator in revenue market share. The youngest operator is also narrowing the gap with market leader Vodafone Idea. Sumit is here with some comparisons. Sumit.
So if you see, according to the latest data put up by TRI, Reliance Jio's revenue market share continued to grow for the 6th consecutive quarter, and now they are the second largest telecom player by revenue market share. However, the growth compared to last quarter was at a lower rate. Now for Bharti Airtel, if you see, they have again seen a drop in their revenue market share, and this time the drop was the biggest that the company has seen since it began its operation. And in the fourth quarter, the revenue market share stood at close to 28.6%. For Vodafone Idea, they also saw a drop in their revenue market share, but the drop was the lowest in at least the last 4 quarters. In fourth quarter, the revenue market share stood at close to 31.5%. Now, if you see for the telecom sector as a whole, the adjusted gross revenue has continued to increase for the second consecutive quarter, and in the fourth quarter of financial year 2019, the adjusted gross revenue stood at close to 32,200 crore rupees. Now, this growth for the second consecutive quarter looks like a positive sign, but it is actually not, because the growth was not a broad-based growth, and it was led by only 2 telecom players. Firstly, the state-owned BSNL, and secondly, Reliance Jio in the fourth quarter of financial year 2019.
But it's not looking great for revenue growth for Jio, is it?
For Reliance Jio, if you see, the company has seen a sharp slowdown in the growth despite a strong subscriber addition. Now, if you see, the telecom operators adjusted gross revenue in the fourth quarter of financial year 2019 grew only 3.8%, as against an average growth rate of 15% in the 4 quarters of calendar year 2018. As you can see, from Q4 FY18 to third quarter of financial year 2019, their adjusted gross revenue grew at close to 15% on an average, and in the fourth quarter has sharply fallen to close to 3.8%, and this is despite the fact that the company has been adding customer base strongly in each of the quarter. Now, along with this, if you see, this is for the very first time that the company's adjusted gross revenue has grown at a slower rate compared to the reported revenue growth rate. Now, this could be because of higher share of revenues coming in from the non-core businesses of the company. However, we do not have a definite reason for this, because the company has so far not provided any clarification on why the reported revenue growth was higher than the adjusted gross revenue growth in the fourth quarter of financial year 2019.
Last word, how are things stacking up for Airtel?
Now for Airtel, if you see, in the fourth quarter, the company had reported its fastest revenue growth in the last 3 years from the India mobile business. However, the adjusted gross revenue data that TRI has put up, there it is showing a decline. Now in the fourth quarter, if you see, the reported revenue increased by nearly 4%, but according to the adjusted gross revenue, that is the core revenue from the telecom operation, that has declined by nearly 8% compared to last quarter in the fourth quarter of financial year 2019. Now this decline could largely be on account of write-downs of bad debts arising from the interconnect usage of the operators who have shut their operations, and because of postpaid receivables which have turned bad which could be pertaining to the last 3-4 years. However, this explanation is according to a couple of analysts, and company has so far not provided any clarification on why this divergence in the reported revenue growth rate and the adjusted gross revenue growth rate. Couple of other factors that we notice in Bharti Airtel's data that TRI has put up, firstly, in the 2 key metro circles, that is Delhi and Mumbai, the company's adjusted gross revenue has declined sharply by nearly 47% and 33% compared to last year. Now, these 2 circles contribute nearly 9% to the total revenue of the company. Along with that, surprisingly, in the state of Jammu and Kashmir, the company's revenue have turned negative, and that's the reason why the adjusted gross revenue in the fourth quarter has declined for Bharti Airtel by nearly 8%.
Swami, thank you for that. A 2-judge Supreme Court bench has ordered the UP police to release Prashant Kanodia immediately. The journalist was arrested for tweeting an objectionable video on Chief Minister Yogi Adityanath. On Sunday, Arpan Chaturvedi is standing by. He was at the courtroom when the order was read. Arpan, what did the judges have to say?
That's right, Harsha. So today, as soon as the hearing began, in a few seconds, it was very clear that the court was not inclined in favor of this arrest, which was made by the UP government. The court questioned the need to make this arrest. They also made it clear that they're not giving an opinion as far as the tweets posted by Prashant Kanodia is concerned. Justice Indira Banerjee said that while they may not agree with the tweets, but they were not strong enough reasons for the arrest to be made. They also questioned the UP government on certain procedural grounds. Interestingly, we found out today that one of the sections, IPC section 505, which deals with statements amounting to public mischief, was added after the arrest was made. Justice Indira Banerjee also questioned the Lucknow High Court, the Lucknow magistrate order in which Prashant Kanodia was sent to 11-day custody. The UP government tried to argue that on the procedural grounds that they should first approach the High Court for appropriate relief, but the court made it clear that under Article 142 they have the power to do complete justice. And of course, after Justice Ajay Rastogi also made it a point that we still have a constitution in this country and people cannot be arrested even if they do not agree with the specific tweets that Prashant Kanodia made. And after that, of course, the order was read out where they have granted and ordered the UP government to immediately release the journalist on bail. However, the case against him has not still been quashed. The court said that you can go ahead with the proceedings and conduct your investigation, but the arrest per se was illegal.
Papan, thank you so much for that. Out of time on the show. Thank you so much for joining us on lunch today. Lots more coming up on Bloomberg Quint.